Hello, I'm Sylvia Jeffries. Welcome to A Current Affair. We're constantly told to be on the lookout for scams, but sometimes they're incredibly hard to pick. Tonight, how to spot the red flags on fake investments that are robbing Aussies of their life savings.
Decoding the world of scams. Why everything seems fraudulent. Are you tired of constantly being on guard against scams? Constantly questioning the legitimacy of every call, email, or offer that comes your way? You're not alone. Scammers have become masters of disguise, weaving their way into the fabric of our daily lives. But don't let their clever tactics fool you. In this video, we'll be delving into the world of scams and exploring why they are so prevalent in today's society. Get ready to become an expert in spotting scams and protecting yourself from falling victim to these deceitful schemes. So join us now. It's time to take control and decode the world of scams. It's clear that the public is fascinated by con artists because we are happy to see someone like Sam Bankman-Fried, who was just found guilty of robbing investors of billions of dollars, go down. But we also celebrate the luxury and fortune of those like the Wolf of Wall Street, who embezzled millions from investors, and exalt them.
Better Business Bureau is warning about a potential phone scam that's making its way around the Bay Area. People are getting calls from unknown numbers, and once you pick the phone up, the caller asks you something to get you to say the word yes.
Still, the corporate world is affected by this appreciation in ways that go beyond simple amusement. The establishment of hundreds of fictitious businesses with phony business plans and users, intended to draw in venture capital investment firms such as Sequoia, Andreessen Horowitz, and Excel, has been documented by journalist Aaron Griffith. These companies had become so wealthy that they were unable to invest in fresh concepts quickly enough and frequently pushed entrepreneurs to inflate their numbers in order to secure the funding they needed. While some of the enterprises established genuine businesses with this investment, others had to keep lying to investors in order to keep their interest. Because of this, sincere business owners had to contend with those who were prepared to fabricate information or willfully mislead investors out of millions of dollars. This problem went unnoticed by the venture capital firms who put growth above all else, since they knew they could still sell these companies to strategic investors or flog them to the public through space cases. Examples of this include Abraham Shafi's IRL, which raised $150 million at a $1 billion valuation and claimed to have millions of daily users before a board investigation revealed that 95% of its users were also fake. And Charlie Havis, who created an app called Frank and faked millions of users before selling it to JP Morgan for $75 million. From only these two phony apps, a total of $325 million might have been invested in legitimate businesses. But there are 5 reasons why lying almost always wins out over being truthful. The main factor contributing to fraud's success is that, despite more awareness, people are no longer motivated to check. While con artists and fraudsters might just make up stories about how amazing their company is, honorable, truthful companies and people are bound by truthfulness and laws. Since fewer people are checking these days, they can get away with it longer. The Federal Deposit Insurance Corporation, Federal Trade Commission, and Securities and Exchange Commission administrators have all said that their organizations do not have the capacity to regulate market activities. The enforcement results for 2022 show that the SEC is now largely dependent on whistleblowers to prosecute instances involving insider trading, securities manipulation, and pump and dump frauds. Government regulators receive inadequate funds, as you are all aware, but the private sector has also failed. Millions of dollars were invested in FTX, Theos, and WeWork by sophisticated investors, but little to no due diligence was conducted to substantiate the founders' extravagant claims. Because of the low interest rates, the buzz around venture capital investing, and the growing acceptance of SPACs, there was an abundance of investor funds looking for the next great thing. The benefit for founders with quirky tastes was that they may find backers ready to invest in the venture that generated the most excitement. The companies that could generate the most excitement were those that could just make up stories about how they were transforming the world, if only they were true. In my experience as an investment banker in the healthcare sector, less appealing startups with realistic objectives tend to be overlooked by more seasoned private equity professionals during the due diligence phase. Venture capitalists have the impression that companies making ludicrous promises about transforming the medical landscape are far smarter than they actually are. While there are now unscrupulous entrepreneurs exploiting big businesses, most fraud does not happen in these settings. Most frauds target ordinary people, and even if those people don't make any dumb mistakes themselves, there are two additional concerning developments that make it more advantageous than ever to pass the cost of fraud onto victims. You could understand why everyone thinks everything is a fraud now that you know how money works, aside from scams, of course. Financial fraud is on the rise, with smaller scale scams impacting a considerably broader range of people than anticipated. New types of fraud are more concerned with influencers and their following than they are with elderly people who are mentally declining. In fact, 61% of all fraud contacts were started by influencers, according to a 2021 FTC report on consumer losses from scams. While many influencers aim for wealth and fame, they frequently promote get-rich-quick scams in order to support their way of life. While some influencer companies offer excellent solutions, some do not, and the things they do can harm gullible customers. Influencers and traditional celebrities can now work together thanks to technological and cultural advancements, normalizing product marketing and the sharing of antics online. Because of this, many influencers may never be able to secure a real career. Instead, they will have to take advantage of the opportunity to profit as much as they can from their audiences. The paradox of the grift in general is the problem, not only the harm caused by blatant scams. Many individuals who are in financial danger lack the time or means to carefully consider every offer they are presented with. While it can be tiresome to scan every email, text, or phone call for dubious links,
if you receive an unsolicited call, you should be prepared to receive the call and say things, may I ask who's calling? What is this call about? And not respond to their question to you. Ask a question with a question.
Vigilance can help consumers avoid falling for fraudsters. Prioritizing reliable sources of financial information and exercising caution when it comes to influencers and their advertisements are crucial. In the end, more work needs to be done to inform and shield people from financial fraud, which can seriously injure gullible victims. Get-rich-quick schemes and items promoted by influencers may be alluring, but consumers should be ready to thoroughly investigate any offers they get before accepting them. Furthermore, it is imperative that regulatory agencies and other governing organizations combat financial fraud and prosecute individuals accountable. Since fraud is a terrible reality, people tend to believe that everything is a hoax. Influencers frequently support high-risk investments while disparaging more secure choices, such as BlackRock. It's critical to prioritize reliable sources of financial information and use caution when dealing with influencers. It makes more sense to invest in a reputable corporation like BlackRock rather than taking a financial gamble on an influencer's token. Influencers frequently oversensitize investing by emphasizing ostentatious displays of material wealth and untrue claims of financial success. Because of this attention-seeking culture, fraud is viewed as a high-status behavior, with less repercussions for those who commit it. Additionally, grifters have excellent prospects to sell tips that guarantee large profits thanks to new technologies, but it can take years before these technologies have actual commercial applications, putting unsuspecting investors at risk. This issue impacts not only gamers, but also the financial industry as a whole, with influencers endorsing nebulous, legitimate-sounding internet enterprises and venture capital funds investing in anything that purports to use AI. The quick development of new frauds is mostly due to the rapid pace of new technology, which individuals are eager to learn about. It's critical to avoid overly dramatic assertions and to give priority to reliable sources of financial data. The only surefire method to develop wealth and attain long-term financial stability is via diligent saving, not through schemes to get rich quick. The fourth reason people are willing to persuade themselves that frauds are not scams is because they are desperate for solutions. 62% of Americans, according to data from Lending Club, are living paycheck to paycheck, and no one on the minimum wage can afford to rent a basic two-bedroom apartment nationwide. To obtain employment, applicants may need to go through up to 17 interviews. Interest rates are also going higher, and the cost of necessities has doubled in the last 5 years. Buying a home is extremely tough, and there is a true housing crisis in the United States. 4 out of 10 customers believe that their condition has gotten worse since last year, and many people find appeal in anything that offers relief from a hopeless scenario. The fact that the media sources tasked with informing us about this have also concluded that sensationalism pays better is the sixth reason why everything appears to be a scam aside from scams. Over the past 200 years, journalism has suffered, and we have enabled this to continue. As a former investment banker, I will also be penning a comprehensive piece on the culture of deception in the financial industry. For more information on how money works, and to read articles published by me and other leading finance creators, be sure to subscribe to my free email newsletter, which can be found in the description below. We hope that this conversation helps to clarify the ever-growing and constantly evolving world of scams and frauds. Recall that information is power, and that being aware of danger ahead of time might help avert it. Remain aware, alert, and protective of both yourself and those you love. Keep figuring out the realm of frauds, and we'll talk about it again in a moment. For more latest updates, kindly hit the like, share, and subscribe buttons. Thanks.